If you master supply and demand, you can earn regular profits from trading. But I know 90% of people will leave the video right away because they don't want to learn anything for free. If you want to master supply and demand, you must watch this video. In this video, I'll explain what supply and demand are and why you should trade them, how to plot supply and demand on a chart and how to trade them. At the end of the video, I'll also share a simple strategy. This video is going to be very effective, so let's get started. First, let's look at supply and demand. Basically, supply means aggressive selling. It tells us where the big players are selling. And demand means aggressive buying. It tells us where the big players are buying. Look here on the screen, this big red candle is telling us that aggressive selling has occurred here. This means that both volume and momentum were high here, pushing the market down. And look here, the big green candle indicates aggressive buying. Meaning, both volume and momentum were high here, pushing the market up. Whenever you trade by looking at supply and demand, you should look at these two things. I'll explain why this is important later. If you see such small candles on the chart, you shouldn't consider them a supply and demand zone. Because small candles have neither volume nor momentum. Why should you trade on supply and demand? As a retail trader, you have less capital, so you should trade where the big players trade. Now, where are these big players buying and selling? How will you know? Look here, the market is going down with big red candles. This means there's a supply zone here. Big players are selling here. And just like that, here the market is moving up with large green candles. This means there's a demand zone here. You should only trade in areas where large candles are forming and where both volume and momentum are high. Because these candles tell us where big players are buying or selling. Look here, momentum has come here. Now you can tell for yourself where the momentum has come. If you see momentum here, please write yes in the comments, and those who don't, please write no. But I know many of you will answer yes, because I've already told you that where large green candles are forming, big players are buying. So, you have to buy with them and make a profit. But if it were so easy to make money by drawing the supply and demand zones, why are 90% of traders losing? So the answer is they don't draw the supply and demand zones correctly. So let's understand how to draw the supply and demand zones correctly. The first method is to check the chart for 3 or 4 momentum candles. Only then should you enter, as you can see here. However, you shouldn't mistake these small candles for demand zones. The second method is to draw a rectangle where the momentum began. If you don't know how to draw a rectangle, I'll explain it to you. Bring the rectangle from here and draw it this way. But keep one thing in mind when drawing the rectangle. This first green candle should cover both its high and low, as I have done here. This is a complete zone, a demand zone. And the next time the price returns to this zone, you can make your entry. But you shouldn't enter just like that. You must first get confirmation before entering. I'll explain how you'll get confirmation later. Let's look at another example. Look here, 3 large red candles have formed. So, draw a supply zone by covering the high and low of the first candle. Then, you need to wait a bit until the price returns to the supply zone. Look here, as soon as the price returns to the supply zone, it moves rapidly down. So, you could have opened a short position here. But I already told you not to take a trade without confirmation. Let's look at the second method. You need to find a zone where the candle's wick is long. Because a long wick tells you that the price has repeatedly rejected from here, and this level is called a rejection level. You need to draw a zone at such a level, as I have done here. Here, you can see that the next time the price returns to this level, it moves upwards. Now you can understand that this is a strong demand zone. So far, you've learned 2 methods to draw supply and demand zones. But let's understand how to take a trade after getting confirmation. I'll explain with some examples to make it clearer. Look here, 3 green candles have formed, so we can draw a zone on the first candle. This zone will be our demand zone. Now we need to wait for the price to reach this zone next time. The price has rebounded here, but you shouldn't enter without confirmation. How will you get confirmation? After this candle that appeared at the first zone, did the next candle break its high or not? In this case, it did break. So, you can make your entry here, and your stop loss will be at the swing low. You can use a minimum of 1 to 3 for the end target. And similarly, you can also create a short position. Let's look at an example of that. Look, here, 3 consecutive right candles have formed, so we'll draw a zone adjacent to the first candle. This will be a supply zone for us. Now, we'll wait for the price to reach this zone next time. As soon as the price reaches this zone, we need to get confirmation. The next candle broke the low of this candle and closed. This candle is telling us that big players are selling here. So, you can set your entry here, and your stop loss will be at the high of the first candle. You can set a minimum of 1 to 3 for the end target. If you've followed this video so far, there's a surprise for you. Now, I'll share my strategy. Whenever I take a trade, I don't just take one confirmation, I take multiple confirmations. Only then do I enter my trade. I use 2 tools to get confirmation. The first is Fibonacci, the second is volume. I only apply this strategy when the market is in an uptrend or downtrend. For example, here's an uptrend. So, I'll add volume here. First, I'll go to the indicator section. I'll type in volume, then I'll click on volume. Now I'll change its settings. To do this, I'll go to settings. Here, I'll go to style. I'll tick volume MA. Look here, a blue line has been added to the volume area. This line is called the volume average line. This line tells us that if the volume is below this line, the volume is low. If the volume is above this line, it means the volume is high. Look here, there are 3 regular green candles. So, here you need to draw a demand zone. You need to draw a demand zone by covering the high and low of this first candle. Now we need to wait for the price to return to the demand zone. As soon as it approaches the demand zone, it tries to move higher. Look here, a large green candle has formed here. This means that big players are buying here. This is our first confirmation. For the second confirmation, we need to check the volume. If the volume is above the average line, we get the second confirmation, as is the case here. And here, the next candle also broke the high of this candle. This is our third confirmation. Now, for the final confirmation, we need to see whether the Fibonacci 0 level was broken or not. As soon as it breaks, you can set your entry, and your stop loss will be at the low of the breakout candle, and you can take a 1 to 3 target. Can you see this? We made a profit here too. Let me tell you something. Don't apply this strategy directly to the live market. First, backtest it to see if it's working for you. If you don't want to put in the effort and want to backtest a few seconds using ChatGTP, then go and watch the video on the screen. I've explained how to backtest a strategy in a few seconds using ChatGTP. So, we'll meet there.